Hi guys, this is Crowd Investing. Today we are going to talk about how to use the option to double charge your investment account. So the option can be used for the investor or for the trader. But today we will more focus on the investor only by telling you how to sell the covered call and how to sell the cash secured put and how to use the option to protect your portfolio. Okay, first we have to understand what is options. Options is actually a financial contract between the buyer and the seller. Okay, if you are the option buyer, you have the right to sell or buy the underlying stock at the agreement price. Agreement price, usually we call it strike price. If you are the option seller, you are obligated to sell or buy the underlying stock at the strike price. And one contract is equal to 100 share in US. If there is a Hong Kong, there is a difference. Some Hong Kong is 500, some is 100. It depends. So there are basically two types of the options, call and put options. If you are playing the call options, right, you can either be the buyer or the seller. If you are the call seller, means that you are selling the covered call. In the put option, you can also be the buyer or the seller. If you are selling the put option, basically you are the selling cash secured put. From here, you can notice that investor are basically the call seller or the put seller. Means that we are only sell the options. We never buy the options. So from the call option first. So if you are the call option buyer, right, you have the right to buy 100 share of the stock at a specific strike price and then on or before the expiration date. Then if you are the call seller, right, you are obligated to sell 100 share of a stock at a strike price on or before the expiration date. So this is how the options look like. Let's say you buy one Microsoft contract June 230 call at $7. So Microsoft is the underlying stock. June means the options expiry in June. 230 means that this is a strike price, this is the agreement price. Call options, $7 is a premium that the buyer pay to the seller. So okay, if you are the call buyer, you are paying the premiums to the call seller to get this option contract. So after you pay the premium, right, you have the right to buy the Microsoft share from the call seller at the strike price, which is 230. So if the Microsoft price go up to $300, you can still buy at 230 from the call seller. So if you are the call seller, right, you receive the premiums from the call buyer. After you receive a premium, you are obligated to sell your Microsoft share to the call buyer at the strike price, which is $230. So the call seller will have to deliver the 100 share at the strike price. So this is the profit and chart. So if you are the options player, you must know how to read this chart. Okay, so this is an example. Buy the call options. The one Microsoft share June 260 call at $7. So you can see that strike price is 260. By the way, this is profit and loss. Then this is a stock price. Then 260 is your strike price. So what is your break even? If you are the buyer, the break even point is the strike price plus the premium that you pay. So the premium is $7 here. So 260 plus $7 equal to $267. This is your break-even price. So what is your max loss? The max loss is equal to the premium that you pay, which is $7 times 100 share equal to $700. So $700 is your max loss. And the break-even price is $267. So if let's say the Microsoft price go out all the way until $280, then your profit will be the stock price minus the strike price minus the premiums. Means that the stock price is 280 minus 260 is your strike price and minus the $7 that premium that you pay and times 100 share equal to $1,300. So there is a pro and cons for the call buyer. Call buyer actually have the limited risk and unlimited return because your max loss will be the premium that you pay. but Microsoft share can be go out to $300, $400, or $500, so the return is unlimited. The cons is to get the profit, right? The stock price must move above the strike price plus the premium that you pay, which is the move above the break-even price. So it means that if you are the core buyer, means that you are very bullish about the stock. Okay, move on to our main topic, how to sell the call. Okay, so if you want to sell the call, you have to add in a little bit of the technical analysis. Okay, you look at the Microsoft chart. Okay, you see that Microsoft chart, usually they go out really far away from this blue color 50 MA, then it will retrace. So currently the Microsoft share is moved very far away. It's about $259.61, so that you are expecting the Microsoft share will going back to the blue line. So in this case, right, you can sell the Microsoft share to take profit, but you don't know that Microsoft share will continue to go out or not. So you can also sell the cover call. Okay, let's say I want to sell a cover call, right? The expiry is June. So if I sell the call, the strike price is 260 because the current Microsoft share is about 259. Then if I sell, right, then I get a premium is $9.50. So this is how the profit and loss chart will be look like. Sell call options, one Microsoft June 260 call at $9.50. So you see, so what is the max profit that you get? The max profit you get is the premium that you collected. So means $9.50 times 100 share equal to $950. So this is the max profit that you get. So the strike price is 260. So the break-even point is where? Break-even point is the strike price plus the premium that you collect. So 260 plus $9.50 equal to $269.50. So this is your break-even point. So your max loss is actually unlimited, because if the Microsoft share go out to $280, then your max loss will be equal to the strike price minus the stock price plus the premiums, which is 260 minus 280 plus the premium that you collected is equal to minus $10.50 times 100 share equal to $1,050. So basically, if you are the call seller, right, you are having the unlimited risk and limited return, because the return is the premium that you collected. And the unlimited risk is come from the if the Microsoft price continue to go up. That's why I say that you have to add in a little bit of the technical analysis. Only sell the cover call when the price is far away from the moving averages. By doing this, right, you actually can create a monthly income. And one very important thing is you only sell the cover call when you have 100 share in your portfolio. Do not sell the cover call if you do not have 100 share in your portfolio. Then you will be selling the naked.